Good afternoon, traders. Hope you're enjoying your weekend. Just a brief weekend review and preparation for the upcoming week. And once again, you can just see how price reached their extremes on both ends and reversed. So you're just in this new trading range right now, and this market is just trying to decide exactly where they want to go. So you can see they're protecting these lows down here. No matter how hard we're pressing down here, they're running away from it. So for now, they're holding it up, and for good reason, because you got the 100 pretty much underneath. And I think any breakdown of this location, and I gotta believe we're gonna roll. But until then, it is what it is, and this is your range. So you know, it's how you put this in perspective and better way to understand at least my particular approach towards trading these futures and one that you can utilize as well to your advantage. I need to understand that you don't have to necessarily trade this method. There are many trades in between that can provide scalps. It really comes down to what suits you best. As usual, it's to me, it's the locations, the pivots, the MAs, and this is because of how well price reacts if and when they do reverse and or if they break out. I'll set an example in a second. So basically, this is your week. Monday, Tuesday, we had that really bad close on Friday, and they settled in here somewhere around 75, 77. Monday, you gapped higher to start the day. And my philosophy on gap hires is wait for it to fade and lose momentum. And that's exactly what it did on Monday. It rolled the short, which I took, and I played it down to the gap fill, which was down to about 80. It took a while, but it pushed lower. I walked away pretty much after I got filled on mine, but it came all the way down, and you can see it held 75, which at the time of the day was S1, and it turned out to be a great buy for what turned out to be the next markup in the afternoon or the morning. And then we came into Tuesday. Now this is a really interesting day. I was actually up early. We were up all the way up here at the time, which is around 39.40, or I mean 43.40, 44.40, 44.39, and I'm not sure why we were up there. And it was just sitting around the MA at 7 o'clock. I seldom do these trade at that time of the day. I took a shot up here because I kept saying to myself, the trend's been down. We're gapping higher. I get it. We're making a higher low, but the market's still under pressure. So it still remains sell fade and momentum at these levels. Now, by the time morning rotation came up, they were down to 29, which still turned out to be a fairly nice short to, I think, settlement, which was around, might have been as low as 12. And then they ended up rolling them down and they couldn't get any lower than 95. And then came what turned out to be a really interesting day was Wednesday, and you can just see what they did. So, they opened up right here, and there was so much buying. I mean, by the time I even settled in, they were all the way up around 44.25. I mean, there wasn't any pullback, so I just let it play out until it got up here. And I believe at the time, they were kind of hesitating. I took the short because that's how I've been playing it. And I should have known better because the Nasdaq just never stopped. But that's how I trade. I took it, and I got pinched here. They didn't really roll. I could see that this it was a dead trade, and I ended up getting stopped out for a loss. And then I just kind of let it go. I was like, you know what? You can see the writing was on a wall. You had some probably what was institutional buying down here, and then by the time he got up here, it was a breakout to the upside. They didn't stop buying. It was like two-fisted buying. And maybe the retail got on board here. In fact, the Nvidia earnings were coming out at the close So I'm sure this is all front running into that, and H jammed them. And then at 3 o'clock, the earnings came out, and lo and behold, here we are. We are up at the extreme. This is the extreme. You know, this has been trending down. The markets are correcting, and you get this huge run up. Okay, right back into these MAs. And what is a catalyst up here to take us higher? Well, I think they pretty much told you by the morning rotation. We're up and up around, I think this day they opened up around 62, and they rammed them all down to 50. A little shy of settlement, which was, I think, 45. And then they rammed them back up, and that was a professional shakeout. They gave it a first sell down, and then they tarred with a major buy around here on 50. I mean, it took off. It was hard to get. I didn't dare touch it, and it came all the way back up to 62 again, I think. Couldn't get through this MA, and then they spent the rest of the day rolling on it, and they just jumped on it because I think fear started to enter the market regarding the Fed's next move, and they jammed them all the way down here and back down to 75. So we come into Friday in anticipation of what's going to happen, and you can just see once again failure at the extremes, failure at the extremes. These are the extremes down here. This is a big deal, and so are these levels. As you can see, prices just running out of gas here, and there's just not enough momentum here yet. Nobody wants to challenge 100. Friday was an interesting day. They opened up a little higher. The gap was down to about 85, I think. So you knew that there was an opportunity to get short. It was a matter of when. So you had to weigh it out. This is a volatile day. The swings were pretty hard. So it's not easy. It's not very easy to enter for newer traders because they move so fast. And if you chase, you just get run over. But this played out pretty nice in terms of the pivots. By the time they finished, yeah, bouncing around, they were going back and forth between 4,400 and 4,410. They tapped out at about 17, and 15 was the pivot for the day. And basically, they rolled, came down, filled a gap. I think they had one more run up that brought us to the high at 27, which is probably halfway of 85 and 65. And it made a new high. And that high, they just rolled them all the way down to 65. Actually, once they broke 80, which at the time was a trend, and there wasn't a bid in sight. It was all pouncing down to 65. Once again, they came off of this number really hard, and that rally was pretty vicious. I mean, I saw it, couldn't react to it, but I walked away. By the time I came back, they were in the mid 80s, and then they spent the rest of the day above it. So that's 89 was as low as they got on Friday afternoon. That's once again, this is where we're at right now. The markets are trying to figure out where they want to be. So, the 50 is going to be the key. And you can see the Dow has pinched their 100, but they closed above it. So we're going to have to see whether or not they protect these lows or make their way to the 100. So we'll see what's in store for the next week. But this is the week of review. And if you have any questions, feel free to ask. Take care.